From the nation's capital, the Conservative Caucus presents Conservative Roundtable, an in-depth look at today's most important issues.
Welcome to Conservative Roundtable. I'm Howard Phillips, chairman of the Conservative Caucus, which sponsors these programs. Our guest today is Dr. Edwin Vieira. Dr. Vieira is a record setter. He's got 4 degrees from Harvard College. He's a graduate of the college as an undergraduate. He has a master's degree in chemistry. He has a law degree from Harvard Law School. And what's the other degree, Ed? A PhD.
In chemistry.
PhD. And you studied under a Nobel laureate when you took chemistry.
That's right.
That's very interesting. But one of the things for which Dr. Vieira will likely be remembered is his magnum opus, Pieces of 8. The only book that really details the monetary history of the United States. It is a magnificent book. But what we're going to talk about today, Ed, for starters, is how did America get into this mess economically, and how do we get out of the mess?
Well, the economic problem dates back a long way, and maybe it begins in 1862 with the generation of the first legal tender paper currency by Congress. Unconstitutional, as it turned out. But the Supreme Court, following the Civil War, decided that it was probably prudent to say that it was constitutional because a lot of people believed that the generation of that currency had been useful to the Union Congress in essentially raising revenue for a very unpopular war. So that was the beginning. That let the cat out of the bag, as it were, this generation of paper currency. Simultaneously, that same Congress created, under the National Currency Acts, a system called the national banks, which we still have today. That was also designed for the purpose of stabilizing the banking system, number one, and number two, tying the banking system very closely into the Treasury of the United States. Because under that system, the banks could issue currency to 90% of the amount of the bonds that they had purchased from the Treasury, which the Treasury held. So there was an interlock there. That relationship did not stop banking panics. In fact, there were a number of them during the 1870s, 1880s. And on the other side, tying the bank's currency to bonds limited the ability of the banks to expand the currency because the Congress in those days was not too interested in expanding the public debt. So as a result of those two elements, the Federal Reserve System was set up. It can essentially monetize anything it wants.
In 1913.
In 1913. It can essentially monetize anything it wants, so as we're seeing today, there really is no limit to the amount of credit and currency that come out of it. And then, number two, it was designed to be, as they say, the lender of last resort on the very top of a pyramid of banking pyramid system, so that bank panics could be, if not entirely prevented, they could be mitigated or ameliorated because you had this source of new money up there.
Was the Federal Reserve Act of 1913 constitutional?
No, it wasn't constitutional. It's a fascinating little vignette that comes out in the legislative history, the debates in Congress. One of the legislators said to his colleagues, look, if we did this, if we set up this kind of essentially cartel arrangement for any other industry, everyone would recognize that it was wrong. Well, no one listened to him. This was like 1912, I guess, just before the year before the act was passed. Comes 1933, that exact structure was set up for every other industry in this country. It was called the National Industrial Recovery Act. It was Roosevelt's first attempt in the New Deal to deal with the Depression. Went to the Supreme Court, 1935, the Schechter Poultry Company versus United States case, where the Supreme Court held that that structure, which purported to delegate legislative power to private groups, so that private groups were essentially making law now for themselves within their own industry. But that was the principle. They said that type of delegation was simply unknown to our law and beyond the powers and prerogatives of Congress. Boom, unconstitutional, unanimous decision. Why didn't the Federal Reserve System disappear? Because it wasn't part of the National Industrial Recovery Act. It had its own cartel structure from 1913, and the Supreme Court has never heard a case dealing with that.
if the Federal Reserve Act of 1913 were miraculously repealed now, what would be the consequences?
Well, Congress has the power under Section 30 of the Act to alter, amend, or repeal the Act at any time, because they recognized that they were giving power to private parties. And they didn't want the private parties to sometime in the future say, well, we have a vested right here that you can't take away from us. So they retained that power. Then the question becomes, well, now, what kind of alteration, amendment, or repeal are we talking about? Because, of course, the entire economic system runs, like it or not, on a Federal Reserve note standard. All the prices, goods, services, are denominated in, quote, dollars, unquote, but that's not what we're really talking about when we use that word. They're not talking about constitutional dollars. They're talking about payments that are anticipated to be made in Federal Reserve notes or
What is
bank
a constitutional dollar?
Oh, it's 371 1/4 grains of silver, fine silver. It was first recommended by Thomas Jefferson to the Continental Congress. It was adopted by the Continental Congress.
How did they get the 371 1/4 number?
The original dollar was the Spanish mill dollar, because, of course,
Pieces of 8.
Well, they called it the piece of 8 because
Divisible.
it was divisible into 8 reales. That was the actual Spanish unit. It was adopted by the Continental Congress. Continental Congress didn't coin any money. On the recommendation of Jefferson, it was put into the Constitution, Article 1, Section 9. You'll see the word dollar. 7th Amendment, you'll see the word dollars. Of course, it's not defined in the Constitution, as many words aren't. But everyone knew what it meant. So comes the first administration. Remember, Jefferson and Hamilton were in that administration. Hamilton was Secretary of the Treasury. Jefferson was Secretary of the State. They didn't agree on very much, those two. But the one thing they did agree on was that they had to determine what this word dollar meant in terms of the actual content of silver. So they performed what's essentially a statistical analysis. They put a group of merchants together who looked at representative samples of Spanish mill dollars that circulated in the marketplace by tale. That's the expression, T-A-L-E, which meant that people would simply take them, accept them at face value, and wouldn't subject them to chemical analysis. So they put some of these together, gave it to a chemist, found out what the average weight of silver was, and announced this in the Mint Act of 1792, and defined, or actually referring back to the Constitution, the unit or dollar is to be of the weight of the Spanish mill dollar as the same is now current. That's the exact terminology. Same is now current where? In the free marketplace. This was the determination of a historical fact. It was a determination of what that word in the Constitution meant by reference to the market that existed then. And now we can't change that definition without a constitutional amendment.
So, in other words, even though 371 1/4 grains is not mentioned in the Constitution, it has irrebuttable legal standing at the moment.
No, that's right, because that was a determination of what that word dollar in the Constitution meant. Now, they might have been wrong. Maybe it was 371 1/2, maybe it was 371 1/8. You know, their chemistry wasn't as good as ours. But we actually cannot go back and redo it because I don't think we have any of the samples that they used. And it doesn't make any difference. I mean, now, having come up with that number, because in a sense it's historically arbitrary, it doesn't really make any difference whether it's plus or minus.
What if someone insisted on being paid in dollars, 371 1/4 grains? Well, I want to be paid in dollars, not in Federal Reserve.
Well, there's no problem with that today for someone in the private economy. If you're dealing with the government, you have some other difficulties because there's certain statutes there. But anyone today can make what used to be called gold clause contracts, because typically they were made in gold early on, late 1800s going up to the 1930s. And all that is a contractual provision that specifies what the medium of payment of a contract will be. And it could be defined as silver dollars, it could be defined as gold eagles, it could be defined as foreign currency. When one of those contracts appears in a judicial case, the court is required to enforce it according to its terms.
What does legal tender mean?
Well, legal tender originally meant nothing more than what a debtor could tender, present to a creditor, that would satisfy that debtor's obligation to the creditor. So usually what was mentioned in the contract. And you had contracts that talked in dollars during the period that we had constitutional money. Well, that obviously meant this silver coin. Congress comes along in 1862 and it says, look, we want to be able to substitute payment. We don't want to have to pay in silver because we don't have it. We can't tax it to that level because of unpopular war. So we want to create a substitution currency, and we're going to give this substitution currency the legal power to fulfill that function, so we're going to call it legal tender. And that's essentially what we have now. It's the statutory power for the debtor to substitute something other than what he ought to be paying. And then the courts will look at that statute and apply that to fulfillment of the contract.
We'll be back right after these messages, and Dr. Vieira will explain to us how we can extricate ourselves from current legal tender responsibilities and from Federal Reserve notes. Please stay with us.
This is Duncan Hunter, Congressman San Diego, and you know, I built that border fence that we use in San Diego right now, the double fence, and I wrote the law that takes the fence some 700 plus miles across Arizona, New Mexico, Texas, and California. And I just want to urge everyone, stand strong on border control. And don't open the door to amnesty, because if you open the door to amnesty, we're going to see massive waves of folks coming into this country illegally, and you'll have lots of people coming in illegally expecting to catch the next amnesty and the next amnesty. We need border control, and we need to enforce existing laws. Hang in there.
I want to say and encourage people to watch Howard Phillips and the Conservative Roundtable. I have great respect for Howard Phillips, and I know he is a man that speaks the truth. He's worth watching.
Here's how you can become a citizen lobbyist and influence how your representatives vote. Write a letter to your congressmen and senators. Speak out on a call-in talk radio program. Write a letter to the editor of your local newspaper, and call the Conservative Caucus for more information at 703-938-9626.
Welcome back. I'm Howard Phillips, chairman of the Conservative Caucus, and our guest is America's #1 economic guru, Dr. Edwin Vieira. Ed, how was into giving one Henry Paulson control over $700 billion? Why did they do it?
Well, the Federal Reserve System and all of its allied financial speculative ventures really have a rope around the neck in Congress. I mean, they hold the whole country hostage. If that system goes down, the economy goes down with it, and social chaos follows. Ergo, unless you have something with which to replace it in a timely fashion, an orderly fashion, you have to continue to prop it up, whatever it costs, because the consequences are so horrendous to contemplate.
Does that mean that were you in Congress, you would have voted for the bailout?
Oh, no. Absolutely voted not for the bailout. But simultaneously, I would have put in fact, probably many years ago, I would have put in remedial legislation to avoid this whole problem by phasing the Federal Reserve System out of existence. You can't have one without the other.
What about Freddie Mac and Fannie Mae? Are those constitutionally appropriate entities?
Well, the Constitution says that Congress has the power to borrow money. There's no suggestion in the Constitution that it has the power to lend money or to create agencies to lend money or to guarantee loans by agencies that have lent money, public or private, so that's essentially the end of it. But nobody seems to worry about that lacuna in the constitutional
So in other words,
power.
It's not constitutional
No,
for those
it's
to
not
even exist?
No, it's not constitutional at all.
Now, what about the bailout of the big three automakers, which, as we tape this program, has not succeeded? As you pointed out, manufacturing is more important than paper money. But is it wise to have a bailout of the big three, or should we let them go bankrupt?
Well, if you're prescinding from the constitutional question, from the legality of the whole business, it would certainly be wiser, in my view, more prudent in my view, to maintain the productive base in this country than to pump more money into the speculative ventures of these people on Wall Street, money that we know is going to be used for whatever they consider to be the greatest immediate profit, and they apparently have shown no concern whatsoever to maintenance of the manufacturing base in this country.
Now, there are foreign cars produced in America by Toyota and other companies, And their cost per hour for labor is about half of what it is for the American companies. And that is because they are not indentured to their employees to provide certain union benefits. They're not indentured to provide certain types of health insurance, et cetera. Would you condition any bailout to the big three on changes that they would have to make to reduce their costs down to the level of costs by foreign companies operating in the U.S.?
You mean prospectively?
Yeah.
See, a lot of the costs that they have really can't be reduced.
You can't undo what's already
They have
there.
these pension benefits they have to pay.
Yeah.
And they may have health costs that they're bound to pay. But prospectively, I'm sure that would be justifiable. But then on the other hand, let's say that's $35 billion. What about the $700 billion going to the financial industry? What about some limitations or corrections, amendments, alterations in the way they're doing business or the way the Federal Reserve is doing business? It seems to me in the long term that's even more important, because that problem is going to be with us even if the auto industry problem is ameliorated in the short term. The problem of the financial industry is going to be with us indefinitely, causing once and again this same kind of problem, because their cycle is expand, pressure to contract, and then somehow they have to find the ability to expand again, and apparently they've reached the limit on that now.
Well, let's say you're not a decision maker, you're not a power broker, you're not someone in the banking system, but you're a young family having bills to pay, purchases that need to be made. What advice would you give them?
Well, their difficulty is really on two levels. How do you save for the future, and how do you pay your bills today? And the only thing I would say in terms of saving for the future, because that's really the long-term, consequential problem, is you do not want to be in dollar-denominated assets unless you're sure there is no counterparty risk, which means that the other party will surely pay. And the short answer to that right now is that they have to look seriously to hard money assets, which of course are silver and gold.
So in other words, if you were giving advice to an American family, you would say, get out of the dollar, perhaps get into something like Swiss francs, if you're going to have a paper currency, and try to acquire gold and silver, which have stores of value and which would enable you to borrow against your gold and silver and make purchases.
Well, that's right. In order to, and also to ride out any large-scale inflationary event that may occur, that they're pumping in trillions of new, quote, dollars, unquote, of liquidity into the market. And sooner or later, that's going to manifest itself in very large price increases. And presumably, the exchange ratio of gold to paper currency will also go up.
What is the, what effect will decisions of foreign governments have on the U.S. economy?
Well, they could have tremendous effects because let's take foreign governments such as China, which are holding large amounts of Federal Reserve notes.
Something like 31% of our debt.
Whatever it is. At some stage, they may look at this system and they say, well, the Federal Reserve system is a wasting asset, and we have to get out of this as quickly as possible. What does that mean? Well, it means essentially repatriating those Federal Reserve note units in the United States, whereas legal tender, we can actually buy something with them. They come in and they start buying land, resources, whatever, hard assets, driving prices up because we now have this huge injection of money that was previously in foreign markets, hyperinflationary event. Right? And the average American, whose income is not going up step by step with this infusion of new money, suddenly discovers that his real take-home pay, in terms of what it can purchase, is dropping and dropping and dropping. So the Chinese gain the benefit, or whoever it is, foreigners gain the benefit of owning these real resources, and Americans pay because they see their standard of living being washed away. And how will Americans react if they discover that the landlord of 50% of American apartments or whatever are Chinese businessmen, foreigners?
Well, if you were a member of Congress with your number one priority being securing continuance in office and re-election, how would you behave in order to avoid the anger, the wrath, the disappointment of your constituents?
Well, I would start right now proposing the type of legislation that would correct the situation. Now, it's very late in the day to do that, but we have no alternative, because at this stage we can't allow these forces to work out, their own result. So that at least I could say, well, I put this in. Maybe I couldn't control the other 435 members of the House, but at least I put it in.
What kind of legislation?
Well, we have to phase out the Federal Reserve System, and the only way to do that without completely deranging the markets is to create an alternative currency, a sound currency based on silver and gold.
Would you need any central bank?
Oh, no, none whatsoever. All we need is the United States mints to strike the coinage. And in fact, if the statute were written correctly, we could make every gold and silver coin in the entire world part of our monetary system. One stroke of the pen. The Constitution provides for that. Well, Constitution gives Congress the power to coin money and regulate the value thereof and of foreign coin. And to see what that meant, you could go back and read Sir William Blackstone, Commentaries on the Law of England, because he describes that. They had simply adopted that same system. But you look at the early statutes that Congress passed in this field, and what they did was, with respect to foreign silver coins, they looked at the amount of silver that was in them, and they created a table relative to the dollar. And they said, well, this one is worth $1, this one is worth $1.50, whatever. And they made them all part of our currency system. With respect to the gold coinage, they looked at the exchange ratio between gold and silver, and they valued those gold coins in terms of silver dollars. So in principle, that kind of a statute could be drafted today. We know what these coins are. We know what their content is. Most of the gold coins and silver coins produced in other parts of the world are not fraudulent. Those governments are not generating phony coinage. And we'll make up one of these tables. It'll take an afternoon in the Treasury to do it.
It's interesting that the same clause to which you're referring talks about fixing the standard of weights and measures, which made it clear that they did not want a flexible currency. They wanted to have something by weight of a determined amount.
That's right. That had always been the rule.
It's an anti-inflationary provision.
Well, they had gone through a terrific inflation. Remember what happened in the War of Independence. Congress, the Continental Congress, generated bills of credit that they called the continental currency, supposedly payable, at least they promised to pay in silver and gold. And then the various states issued their own bills of credit, because at that time the Constitution was not in existence. They weren't disabled in that respect. And typically in a situation, a warfare situation, with tremendous expenditures and no taxation or very little taxation, they overexpanded, and they had a hyperinflationary event that destroyed the economy. And the fascinating thing to me is that the same people who had done that, remember, the ones who had been in the Continental Congress, the ones who had been in the state legislatures, passing these bills to emit bills of credit, many of them now appear in the Constitutional Convention in Philadelphia. And what do? They turn around, recognizing their own mistake, and they say, the state shall not emit bills of credit, and we're not going to give that power to Congress. We're going to rescind all the powers that we had because we saw where they led. Give me a couple of other examples in history where people who have made that kind of a blunder in the past step forward, admit it, and correct the problem.
Stay with us. We'll be back with some final words from Dr. Edwin Vieira. For those of us who love the Constitution of the United States and the principles of liberty on which it was premised, one of the worst years in American history was 1913. Among other things, that was the year in which the 16th Amendment was added to the Constitution, giving the federal government the opportunity to impose a graduated income tax and to, in other ways, directly invade our privacy and rob us of our resources. Until 1913, the revenue tariff was the major source of income for Uncle Sam. The Conservative Caucus strives to repeal the 16th Amendment, abolish the Internal Revenue Service, and eliminate the income tax. Please join with us in this important cause.
The Conservative Caucus, www.conservativeusa.org or 703-938-9626.
Welcome back. I'm Howard Phillips, Chairman of the Conservative Caucus, which sponsors these broadcasts. If you're interested in more information about what we do and these issues, check out our website, www.conservativeusa.org. If you want some of our literature, fax us your name and address 703-281-4108 is the number. We've been privileged to have with us Dr. Ed Vieira, who's given us what is probably the most honest, succinct, and direct account of some of the troubles we face. But bigger troubles lie ahead. What is the federal government up to? How is the government preparing for the chaos that will ensue if we're confronted with massive hyperinflation?
Well, instead of doing what they ought to be doing, and that is preparing an alternative currency to go into the marketplace so that the economy can move away from Federal Reserve notes into a sound monetary system, what seems to me they're doing is preparing a kind of top-down paramilitary response to the type of social dislocation that will occur if you have a hyperinflationary event and then a depressionary event, which I think will be the sequence. First, hyperinflation destroys the currency, then that wipes out the economy and you go into depression. Or maybe the worst of all possible worlds, a combination of the two, what they used to call stagflation, where the economy stagnates while the inflationary event occurs, but both of them simultaneously. And then you can imagine people unemployed, people thrown out of their homes because they can't afford to pay their mortgages, the tent cities of the 1930s springing up, the transportation grid not functioning, so urban areas are without food and medicine and what have you, and you think of the social chaos there and then multiply it by about a factor of 10, and the response will be from the quote-unquote authorities to turn the screws of essentially paramilitary control and get people in line. And that's the worst of all possible worlds, because then we immediately transition from something that resembles a free society, which we have today, to something that clearly is a police state.
So we're on the verge of entering some very interesting times.
As the Chinese say. Yeah. And they may be the only ones that come out of those times ahead.
Yeah. And of course, this is not even taking into account the external threats we might face. Nuclear detonations, attack, electromagnetic pulse that would put us back a couple of hundred years. Dr. Vieira, I hope you'll contact us if you want more of this type of information. Dr. Vieira, thanks so much for your very helpful insights.
Thank you, Howard. I appreciate it.
Keep up the good work. See you next time, folks.